Good morning, good afternoon, and good evening, everybody, depending on your time zone. Mark Douglas said something about the trading psychology book. It says, I think I'm going to just enumerate the important things or points to note from his book. It talks about the trading in the zone. Trading in the Zone, which is a great psychology book. That's the title of his book. He said, one, anything can happen in the market. So you must be ready that anything can happen in the market. Two, you don't need to know what is going to happen next in order to make money. So it's none of your business to know what is going to happen next in order to make money. But it's your business to have an hedge. And so the third point says that there is a random distribution between wins and losses for any given set of variables that defines an edge. So an edge is what we want to talk about, which is the fourth one. An edge is nothing more than an indication of a higher probability of one thing happening over another. So life itself, you wake up in the morning, that you will go and come back. These are variables. Anybody can set out and come back dead. Anybody can set out and come back to life, to his house, without being dead. So in as much as we are optimistic every day, that I go out, I don't want to come back to this house dead. I want to come back to this house alive. A whole lot of things can happen on the way. So it means that you must do what you know to sustain life. You must do what you know to keep living. You are going out to your work or to market or to do business. You are going out there being optimistic that you have to do everything that you know, that you are trained to do to make money and not losses, so that you keep your family afloat, you keep running things as you want to. But you don't go out driving a car, gambling that, okay, this is what they do. They put the ignition on, they press the pedal, they turn the steering. You must know how to drive very right. And you must know how to navigate under different prevailing terrains and circumstances that comes with road and the uh, 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 users of the road, be it the pedestrians, the cyclists, anybody, the trailers and all the every duty. So you have to know all of that. So the edge that you have is nothing more than the indication of higher probabilities of one thing happening over another. And so when you are presented with challenges on the road or near accident cases, you know what to do. You press your pedal, you know when to, or the tire burst, oh, maybe I don't have to press my pedal, I'm running, I'm really speeding, and all of a sudden one tire just got busted. So there are things, you don't get emotional about, because if you are emotional while on the speed and you are going to press your brake, the vehicle is going to somersault and the outcome is not going to be good. So the way psychology, your emotion is have to be under check when you are speeding. Because again, you've got to know that, do I have good tires? There are things you tell yourself, do I have good tires? Is my car good? What's the uh 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 how low it is? We talk about the potential energy, and so many things we talk about, or the center of gravity of a particular vehicle when you are using it, and how good are the roads? Are they bumpy, potholes? And when you have potholes, bumpy roads, and all you want to do is speed, you already know the kind of risk you are taking. So you measure your risk you apply your knowledge to drive safe and to get to your destination. So the edge you have is that knowledge. So the edge we have in Forex is that we are equipped with the understanding of structure and the wave count, and if it's completed or not. Then 5, every moment in the market is unique. Every moment in the market is unique. That is what Mark Douglas, pointed out. So, and I'm going to start with that. Now, looking at DXY, we know that for so many years, if I bring the monthly, I want to be as quickly as possible, but I need to say this so that we know what we know. For so many years, the market has been in an uptrend. Okay. Apart from this initial uptrend and downtrend, corrections here on monthly time frame, uptrend and downtrend. Now, I don't want to focus on that. We want to focus on here, where we add, a change, So we add this move, like a correction, but a big time correction. But all of a sudden, we started like this move came down. We have this move that came down and it properly ended here. And we began to see the series of higher highs and lower lows, so higher highs and higher lows, and the corrections, this and this, up till we get here. So we believe that this cycle of correction of this trend to the downside, this cycle of correction may have finished here. So what we are proposing, you must know, like even on the higher time frame, if what we see largely, it's a movement to the downside. And what we are seeing here, it's more or less like a correction of this move. Two things may happen. The first thing that may happen is that this correction, actually, it's a correction in 5 waves. Because by the time you are looking at between wave 1 and wave 2 here, and where wave 3 is, this is wave 3, it takes exactly at 161.8 extension and nothing more. So it could have been an ABC. An ABC between 1 and 2 and 3. It ticks exactly at 161.8 at this point. Then we now had, at this point, yes, we now had a wave 4 of 3, and we now had a 5. But when you understand what the larger time frame is doing, then you can now understand what you're going to get on the smaller time frame, from the daily 4 hour, 1 hour, even 5 minutes or 1 minute time frame in attempt to look at your correction. So for me, the movement up here, though it's like 5-wave structure, is actually very corrective. Extension between 1 and 2 to get to 3 is exactly not more than 161.8. If it had gone more than 161.8, we would have said, oh, this is a motive and impulsive wave. I'm building something here. So, and immediately after that third wave 3, we had the internal, wave 4, A, B, and a C of wave 4. Then we now had a wave 5. Immediately after wave 5 of 3, see, wave 3, inside of wave 3, the 4 of 3, 1, A, B, C, then wave 5 to finish that. 1, 2, 3, 4, 5. We now had a big 4, A, B, C. Now, looking at this big 4, A, B, C, because if we are thinking that it is a motive wave, it is not motive wave. It is what? It is corrective. So this looks like a correction to this move, even though it's occurring in 5 waves. That's the edge that we have here. Now, when you look at the retracement between a wave 4 here this big fall, and in the wave 2, it went below 38, below 40, almost touching 50. It didn't get to 50. Now, that tells you that's a very deeper, move to the downside or retracement to the downside. So if we are dealing with a motive wave, which is highly motive, it will not pass beyond 38, no matter what correction, or at most 40. So when you have it below 40 and it's 4, it kind of suggests that this move is a correction to this move. Now, with that said, on this time frame, we now had a wave 5 to the upside. So which means we have completed the move here. So, and after each move, after move of a correction, maybe the 5 waves like that, then we are going to have, even though this also is an ABC to this move to the downside, the move to the downside here, that's the move. So it's an ABC to this move. Then we think we're going to probably have, for these 5 waves, we're going to have an ABC, which is A, B, and then a C to the downside. This is incomplete. So I won't be thinking that this price is going to go up and break this. It is not what structure tells me. The structure tells me that over time, we are going to go at least have equal leg to the downside. Now, if we have at least ABC, we're going to see the extent of that ABC to the downside. Is it going to take 100, 127, or 161.8 to the downside? That is one. Now, so if we have that as the correction of the entire run, are we going to go up? It is when we get there that we'll know. Now, with this move, if we are taught that the major movement, it's this big move to the downside, which is very, very important to the downside. And this ABC 5 waves is a correction to this move. Everybody would have thought at some point, because this is now a correction, because it's not an impulsive wave, it's not a motive wave. Oh, this will actually continue to go until it breaks the bottom. That you have at the back of your mind. But it could easily just be an ABC here and turn more upside. So when we get to that bridge, we're going to cross it. We just know that this is quite impulsive to the downside, and this is corrective, and everything inside of here has told me 5 waves, but corrective. There's nothing that is more than 161.8 on the higher time frame, even if it's between 1 and 2. And the character of 4 also suggests that this is corrective. ABC is not motive, just like I explained. So invariably, if this one turns out to go and continue after making probably the first wave here and all of that to the upside and continue to go and break this bottom, I won't be surprised. But then the first conservative things I have to do is to regard this as at least an equal to the downside at 100. If it goes beyond 100, then you should know that it can happen. And if it gets to 127 and 161.8, you should know that it can happen, because it's still part of corrective format. So the nature of structures you see in between on the lower time frame will suggest, if we're going more down, to tick 127 or 161.8. And if you begin to grow and break that 161.8 to the downside without any proper price action, then you know that maybe we are going further more down. So having said that, let me now focus on this area. What we are dealing here had been on since 2022, like about 2 years ago, and we are still doing this. So let me quickly turn to the weekly on the DXY. I told someone, I said, it is not if something is highly impulsive that matters, or the big move that you see that tells you, oh, with that big move, oh, this is the direction of, because it's engulfing candle, it does not mean anything. When you see this engulfing candle, you think, oh, we are going more down. And you saw this, it was telling you it's spawning off. And when you see this in a move to the downside, this is an engulfing candle, you tell yourself, oh, we are going more down, because an engulfing, very powerful engulfing candle. Oh, we are going more down. So, and what did we see? What we saw was small candle building up to eradicate before we had this. So it is not the engulfing nature of the candle alone. It is not the character of the candle or the price action is giving you at a particular time, but you have to look at the entire structure and wave, the way it's building up. And so that got us to know that we had finished this as an A at least. Then this is the first correction to the upside after that move, which is an A of correction of B. So this is an A in itself. Then we now add probably B in the middle. So in that B in the middle, the B correction, so also we have ABC. The B we have an ABC. The A came down as an impulse. So this is the first A of B. Now inside a B, we have it also divided into 3. So B most times is, on a smaller time frame, it's a 3. So A of B, then inside the B, we now have a B, A of B, B of B, and a C of B. So in that C, we had this engulfing candle, which would trick anybody that is reading candle to think that it's going more down. So A of B, B of B, and a C of B finish the B of B. And we can regard this as a capital B in the middle. And this is a small a and a small b. And for a small b, it has its own micro small a, b, c. So we now have a small a and a small b completed. This triad completed a small b. This is a. And from here to here is a c, a small c. So with that, a, small b in the middle, small c in the middle, gave us a big B. So we now have from here down, a big A, a big B. Sorry, a big B. Then we now had a C. These had completed a big B. So a small a small b, a small c, a, b, c. Then we now have a big B. Then with a big B, what we should be noticing is that we should go down again. Now, what character tells us that we are going down also is the nature of the wave building again. This actually is building, it has built itself in 5 waves, just like a mini 5 waves here. We now add another 5 waves. The day I think that this will not make any sense, it is when we take up more than 88 retracement of this move to the upside. Then I will say that then we are going to break it and go up. But for now, we are still calling for more downside, regardless of your big move, whatever you see. So we believe again that we have done the first move, which is the first wave. Then we are seeing a correction of A, a B, and a C here. So we want to see that this is also going to go more down until we break here and we break here. Now that's the weekly. So this is trying to close in a price action that suggests that we are doing a correction. So what kind of correction are we doing? Is this going to go and break this point and this top? When you look at the lower time frame and see the big move, then it is your emotion that is working. So you must be able to know that the edge that Mark Douglas was talking about is not about your emotion, where you are driving and you have had a burst tire on the speed, but you are equipped with knowledge and understanding of what to do. So it is not the noise. It is not about the big move. It's about the overall structure that I've been able to capture and I've been able to explain up to now. So an A, B, C, then we should turn down. Now, in turning down, when you are having the first way building up to turn down, of course, usually it's sideways, like it's highly sideways or consolidating or corrective. And you have this, I believe, is an opportunity for anybody that has missed movement to the downside to look for opportunity to sell again. That is what we are seeing. So we are seeing this move to the upside against the top of this week, or at least to get, retarded and get reactions from here downward. Once this move does not take up more than 88 of the entire run to the downside or to the upside, then we are good to go down. So we are going to be listening or paying attention rather to the structure as it's building up. But if I ask you, we are going to dissect this wave, this move, this structure on the lower time frame to see where this is likely going to go to or what they are trying to do. So your ability to actually decipher what is trying to do is what the edge you have. So let's go to the daily. Now on the daily, we are seeing that this is like a 1 and a 2, then a 3, 1 here. That's the way it has behaved. This may have probably formed like a 1 or 2 because the way it is, like a wave 1, that's the way usually it is. You think it's corrective on, so the DXY had given me that, okay, this looks like a wave 1 and ABC of a wave 2 at this point. Very corrective at about 88. Then after that wave 2, we had a 3-1, and this is going up. We should have a 3-1, and to finish all properly, what we call a 3-2. And the 3-3 is where we expect big move to the downside, and we are setting up for that. So what am I seeing here? What I'm seeing here, because after this first move, the first move to the upside is this, which I may say it is an A. Now, for me to know if sorry about that, was the network. So for me to know that this move is completed and nothing is going to come here to take this top, I must know that in corrective wave, once I go beyond an extension to the downside, more than 161.8, it means that nothing is coming to take this top again. So what I'm saying is that if you take these particular sorry about the network. I think it's really giving us issues. So what I'm saying is that if you see this as an A, once the price will continue to go down again, it's when you look at the extension from here to this point to the downside, and it's more than 161.8, you know that price is on course. But if it's still short, then you can expect a retracement. So for now, this is seen as a wave, and this in the middle, A, B, and a C of B. So it means that what we've done here so far is a B wave to me. And what is going up is the network is horrible. So if it's a C wave, this is A and A, B, C, and this is a C wave, means that this can take this top and break it, but the extension from here to here will not be more than 161.123 to the upside. So that's what I'm trying to say. So could it have been a running? Please, you have to bear with me. The network is just unsteady. So could have been a running flat when you do extension, you know, to the downside between this A and a B here, you could have formed like a running flat, but I think this is more than a running flat. So we must be expecting a extended flat to break this top without getting here, and price is going to come down again. So that's what you expect. And so this is true of what we expect as a C wave, which goes up in an impulse. And for now, we should be expecting at least a correction to the downside before we can have more upside. So that is what we should be expecting now. So we are going to have a correction before we can have a more upside. But it can be tricky because it didn't actually click, you know, up to the extent the retracement of 161.8. So it could be tricky. It might not break this top, but we should think that from now, from the moment so far at so the structure building to the downside is what we are trying to look at. Now, at this point, you may be thinking that it's 50-50, right? Because it has not really moved. So what we are saying is that we are looking at this between here and this as the A wave. So we are looking at that as the A wave to guide us to the low of a B wave here. So if we try to do a retracement to the downside from here, from that level to the top here, that is about 140. It is more than 123. If you had gotten a 123, we'd be thinking of an extended flat. But it is not up to 161. If we had gotten and broken this to the downside, we know we're on course for wave 3. So this is still within the ambient of what we can have as a corrective wave of a 2 to this force to move to the downside. So that is what we are saying. So we're not in the third wave. We are almost crossing it at this level to go properly into the territory of the third wave. So this is still highly corrective as a triad of A, B at 141. So what do we expect? If you are expecting, like, this is the height that probably the price is going to take for now. Let's use this for it. If that's the price that probably the price is going to take for now, price may break it before going down. So we look at the kind of extension we can have. From here, if we are thought of a running flat would stall at about 6.1 here. So it can still, technically, it can give us a running flat. So we've got to be watching for reactions at this level. That's the first level here. We'll be watching for reactions at that level. That's 61.8. Are we going to get reaction at that level? This is an A, B, C, or B, and this is going up as a C. Now, so reaction at this level, if we get reaction at this level, it means that most likely these are the levels we should expect reaction, really. Let me use the green for heat. Green. And the last place we can have that for a running flat will be this. So that it's a very bad network today. So being equipped now, we know that this is the area we should be seeing a reactions if you're going to have a running flat. Because it didn't quite, you know, give us a 1, 2, 3 to the downside. It went past it and it didn't get to 161.8. So, but the most we can have is an extended flat at 123 at this level. So this is 123 here. So which will suggest that we're going to break this as an A, B, and a C. But if they give us a running flat, this is the first point, it's going to break this. If as a running flat, this is the first point of call, but not more than this level. So if you get a price action, we are going to go down and continue to break here. So it may be ending as a running flat. This is out. So we are looking at this first and not more than this area. So if it breaks, of course, we would have broken this top here. You can break this top. We expect it at least to break this top now and rescind and continue its course to the downside. But if they're going to now JOMO and make it an extended flat, price may get here. So we need to see what is happening inside of that place. So on that stage, DXY, I'm trying to let you see if you think it's going to continue to break, if it breaks here and breaks this top, you think it's coming to break this. No, it's not going to break this top for now. It's going to go down either around this area. So we need to see reaction around this area, or it gets here. If this are tick 161.8 from here to the downside, I would have said exactly it's going to give us this. But for now, this is what I'm calling around this area. A breach out of here then tells me we are going here. Now on the 4-hour time frame now. So if we, with that said, on the 4-hour time frame, we are saying that if the price wants to end around this area, it will correct its fourth wave to this point, come down a bit, and with that correction, it will just end it here, and it will continue to go down again. So once it comes here to do around 4, go down to finish 4 and 5, it gives an ending structure here, then know that it has ended its move and it's coming down. So if it's going to go all this way, it's going to give us a bigger correction to the downside before it comes here. So we'll continue to watch. It's not as if it's an endless move. I'm not going to do much because of the network. I'm just trying to, find a way. So the same way, you take that to the euro dollar, the same way to find the levels on the euro dollar, the same way. So you can do the same thing for euro dollar and see where it's going to get to. So we may be building towards the end, and after taking this, we may be going up. So I believe on the daily 2 on euro dollar, if you want to plot it, so we see that this move is not going to take this structure to the downside. It may be a bit different, but you will need DXY to guide you. It may be a bit different here, but you will need DXY to guide you. So what we can see for now is we are looking for a 1, 2, 3 to the downside around this area. So we may be seeing this as a 1 and a 2 and the 3rd. And so once we get the 4th wave and the last wave to the downside, it may be ticking at about extension of this between here and here at about 1, 2, 3 to the downside. It's different here. It's a new wave. It's another wave here. Unlike DXY that we say this is A, it's not the same here. So we have to think about what structure this has formed here. Okay, this might just be it here, this and here, and the downside extension of 1, 2, 3. So we are correcting. So we're not coming to break the bottom. So we're not coming to take this bottom for now. So we are correcting. So it might just be a correction. So let's follow the DXY and the US dollar index. So the same thing on NZD USD. The DXY will lead the way, but it seems we are having a much deeper correction for now. At least up to about a 50, we'll see how it is going to work. So we had finished this move to the upside. If anybody had seen it, is an ending structure that was created there. And let's see. The ending structure was created. Let me go on a lower time frame. So this is the ending structure that was created here, a 1, 2, 3, 4, and a 5. So we have a 1 and a 2. So the ending structure was created here. So all we can do for now, if we want to do this, is to look for a correction to the upside, maybe to this point, to this point of a break of the structure here. When we get a price action, we may sell. So we may sell. So we are looking for a sell. This is a structure that was broken here. The ending structure was this, and the 1 and the 2, and we're going down. So for now, you don't want to be in the sell. Don't continue to sell. Let's look for a correction to the upside for one more drop. And after that one more drop, we'll now know what next we are going to do. If it's enough on the DXY, like I just explained, we'll know where to go next. So let's go to gold and see what gold is trying to do. Let's see what gold is trying to do. I think I did in one video when I was explaining gold, what to expect, that in case this is not an A, B, and a C to stall here, they may actually make this a more correction, deeper correction. And that is what it's turning out to be now. It's going to go into a deeper correction. So now, on this time frame, let me see if I can go to the week. Now, on this time frame, we had finished a fourth wave here, A, B, C of a fourth wave here, and we believe that we are doing a fifth wave. Okay, so on this time frame, we see this as a move of 1, and we are seeing this as another move of 2 here. This is like a next, the 1, 2, the 1, 2 of move here. So we believe that this should stall at least the length of the fourth wave. So our 2 is at this level of this move. So if we do that and we take out our drawing, come in here to the top of that move, the network had failed again. So the retracement will be that of not more than 38 to the downside, and that may go a bit deep. Sorry, terrible network today. So from this low up to this point, the 161.8, it's around, sorry, the 38 is around this area of 22.14. So that is what is giving us on that. So if we go in and look at this, this will suggest where the price will get to at the end of the day. So if you go to the daily, I think I'm on the daily. Yes, okay, I was on the weekly. So if you go to the daily, so we are seeing this as the low, but this will detect where the fourth wave is going to be before we go up then, one more time. And so this for now, it's saying at a 4 and the 5 wave to finish with 3. So of that move. So just like I said, the 4 wave, the 5 wave to finish with 3 of the whole move of 1, 2, 3, 3, and we want to do a 4th wave. So we are seeing this in the symmetry of a zigzag, and a zigzag that can get to like 100 or not more than 161.8 to the downside. So whatever is going to give us, this is quite sharp. And so we need a correction to the upside before we see another drop. So that is what we are saying, we are calling here. So with that, if I go to the 4-hour time frame, 4-hour time frame, and bring out my drawing. So that's the thing that happened here. We thought it was good. Of course, it gave an ending structure also here. If anybody had caught it, would have known that. And that's why when you are looking at structure, you must know that there are different possibilities that it can give you. If the price wants to still do a bigger correction, it will give you a reaction and a sign. And that was what sign it gave. We knew that anytime anything can happen, but it didn't break this structure. If it has taken this to the upside, would have said, okay, that's the end, and we are going up again. So it gave us an A, a B, and a bigger C. So it has broken this bottom now. So the price is going to correct. It's not going to continue to go this way. It's going to correct. The magnitude of correction is what we need to see. So I don't expect you to be buying at this level. When you are buying something, and you must know that when you have this, you don't, get your mind fixated on a particular direction when the structure can give you a varying possibilities. Like we said, is a variables. It was a corrective, a 1, 2, 3, 4, 5, and so that could have been an A, and they could have ended it here and go up. But now it is so clear to us that now they are almost breaking this bottom. So what they are trying to do now, this is a B now. So a bigger A, a bigger B is finished. They are going to do a bigger C. So with that said, we know from what we know where it's going to end by taking our tools from that top to the bottom of B here to this green area and tell that this is where our 100 is. The price is almost there. So, and if they want to do more than that, we will know. So the price can get here before it bounces up again. So these are the areas you must be expecting price. But would it give us an ending structure? So at every level of this, if it gives a reaction, start buying. And when it's buying, once you're in profit, you break even, because price may go up and it will always give a sign that it wants to go down again, probably to test this area. So we must be ready for anything here, because 100 is what should be enough. At least we should get an 100 extension to the downside now. So price will still fall at least about how many pips more? Maybe about 300 pips more. Yeah, about 320 pips more. And that is huge. So, but with this move so far, we need price to correct to the upside. You don't want to sell from here. This is like a knife cutting through. So we need some corrections. Is it starting now? I don't know. Is it beginning of the correction to the upside? We'll see how it's going to go. It has to break some structure on the lower time frame to the upside. And if it's going to go bigger, as in get to 161.8, then we should see close to 50% of this move, you know, to the upside before a further fall. If it's not going to get bigger and it is going to stall at 100, the magnitude of correction here will suggest that if it's not that deep, then we know, let's see, on a 15 minutes time frame, what can we see here? So it may just be beginning of that. And the first structure you have to take out is this one. So once this one takes out this structure, then we know that probably price is trying to go for a much bigger correction. So how do we lace it? Usually what I do, because it's a big fall, the first place you look for reaction is at 38 here. So if it gives us a reaction there, then we know that's the zone. In fact, once it breaks here, we should be thinking of a 2, the second wave, but this is quite sharp to the downside. It can get here, and it may get stalled here. I don't think this one is going to give us a 61.8 before it falls again. If you should get to 61.8, it may mean that it's actually going further up. So these are the levels I will expect this thing. I might need price to get around this area. If price begins to go down from this area to the downside, it may mean that that's the fourth wave, and we are going down probably to end at 100. But if it gets into this vicinity, then we'll see how it goes. But we need a correction now. Whatever correction it gives, before it turns down again, so we may join. But it's not complete. Price is still going down, but it needs to correct. So if it corrects, you can pick a sell for further downside. We still need at least one more leg to the downside after correction. But don't sell from here. Look for your deep correction to the upside, then pick a sell to join to the downside. Now, the last one, it's USD JPY, dollar yen. I hope this thing won't go up again. So now, with what we are seeing here, we are at one entry around this area, which had worked perfectly. And we add another entry around this area. So everything is working out perfectly for us on yen. So I'd seen this as the fourth wave of the big wave, and that this is like wave 1, A, B, C of 2. So when you have A, B, C of 2, I'd seen that this is going to give us a running flat, and it had given us a running flat. So what we need to do now, this shifts the high point of the correction of B becomes your 1. So because this is like an A, B, C, so the low here, the high point here, then we are seeing a new wave building up. So we have entered one position here at the running flat level because of what price gave us. And we are seeing an ABC correction to correct this with 1, 1, 2, 3. So we need this also to finish for another move to the downside for us to get opportunity of entering again. So once this one ends, we can look for more buys. For me, on this time frame, this is like a 1 and a 2 here, the third wave, and we are seeing off the fourth wave. Probably this is the end of the fourth wave. This is going up as the fifth wave, which may break the top or not. So, but once it takes the low here, you don't chase shadow. you are already in a buy from this level or a buy from this level, which is good for you. So we're looking for more buys. You don't begin to buy from here and don't try to sell it, because when you are trying to sell things like this, yeah, all you can do is, okay, is it making any sense to you as per wave? 1, 2, 3, 4, 5. Once it breaks here and it's coming down, look for, we'll probably find an opportunity again to buy it again at any level that it gives us a price action for further upside. That is what we should expect. And we still have at least about 400 pips on this trade to the upside. Now, the way wave count helps us to look for, entries, and when the entries is changing, so you can see how dynamic it is. And the way this one did and eventually came here, and this kind of reactions, I kept following it. At first, I didn't give any entry, but when I saw more structure, I was confident that it was going to give us a running flat. I was looking at JXY pari passu with USD JPY, and it has given us that. On other, couple of yen alternatives, they are trying to make this structure as well, be it pounds, pound yen, euro yen. They are trying to make this structure as well, where we had, this is the beginning of wave 1 here. So you will see that it's going to work out in the end. So this is not gambling, like we said. It's just looking at structures, and it's going to cost at least we're going to get at least to this point of 160 to 41. So anything more is an extra. So but we continue to follow, and your understanding of structure and wave tells you where to buy, to look for buys, where not to look for buys. Like I just said, in here, don't look for buys again here. Of course, that is not to say that you're going to close what you have, positions you have from this point, you let this wave continues, let it come down, we'll look for a point again, we add up. That is how we do it. We try to compound, entries, and we know that the price has no business coming to break this level again. If we are right, talk less of this level. The day price comes here, take this and take this, you should know that, price is now going bearish. But for now, with this structure building up, it's an ending structure to finish up. And after that, there's going to be a move, a big move to the downside. Dollar is going to fall badly. So everything is setting up, even in the wave C that I just said on DXY, everything is setting up for a big crash in the dollar. That is going to, trust me, is going to happen. Trust me, it's going to happen. We are all the small move we are seeing against the dollar. Okay, it's falling. It's just, it's setting up for a big fall in the dollar. So that is what we are seeing. And I'd said so much. So we look for, we are not yet in wave 3 here. So once we So we are not yet properly in wave 3. These are just the beginning of wave 3 that is forming. So we are done with wave 2 in that big contest. 1, ABC of 2 completed. So we are seeing the inside of a 3-1, a 3-2, and this is still trying to go up. Now, the day you will know that this thing is not coming back to break this bottom again, let me just show you. And these are the things we do. The day you will know it's not coming back to break is when you take your retracement tools from the top here down to this bottom, and this one goes over 161.8. Just know that it's not coming to take this bottom again. That is the way we've built up. You look at it on the lower time frame to say, okay, it's not coming here. Then you look at it on the larger time frame to know it's not coming here. So if I'm going to know on this time frame that it's not coming here again, so all I need to do is to take this move down to here, to this point, and see a 161.8 breaks to the upside, then that tells me that then this low becomes a sacred place, a mighty fortress for price not to come to. But it's building up gradually, and it's building up gradually. So let's see the correction. Try to take another moment to the upside here, and we'll see. And when it completes a 1, 2, 3, 4, 5 of this wave of 3, 1 to the upside, it might give us an ABC correction, which is more deeper than what something similar we are seeing on DXY. It's a broccoli. It's a cycle of corrections and complete complete wave. So I think I'm going to come to the end of this. It has been a very nasty experience of breaks because of poor signal. Let me recap on DXY. DXY have not given us wave 3. So you must know that. So we are finished with 1 completely, that's wave 1. So we are saying that it's like it's trying to do a wave 2 to finish the C of a wave 2. So that is what is happening on the DXY US dollar index. Is trying to finish a wave 2, of that big 2. And thereafter, we're going to see an explosive move, or a big drop in the dollar. So see you during the week. If anything changes, I will drop an update. Bye. Like, share, and comment. It makes us give more. Thank you.